and hit audio and go to background noise. Hey guys, we're here with Kashop this morning. This is the commodity report. Kevin is not with us today. He is out ice fishing in Alaska right now, which is awesome. So, glad he's having a good time. He'll be back on Friday, so we're gonna have him on Friday around 12:30. Also on Friday, I have Jason Shapiro on at 11, so that's gonna be great as well. So just kind of going through the commodities like we always start out with. Let's look at performance. Performance over the last month. The Russell 2000 is now leading the way, which is kind of interesting. So the thing that we keep seeing is this massive change in breadth. So if we go here and we take a look at the new highs to new lows list. So basically, the new highs, we're seeing a massive thrust in new highs coming in recently. So we have a bunch of new highs coming in. This is something that we don't see except for during major turning points. So if you look at this now, I should have another chart. Maybe I'll post that today in our letter. But we should have a chart where we use the Russell 2000 against the S&P 500. So maybe I'll post that today. But the Russell 2000 against the S&P 500, this is when the Russell started to outperform basically for a full year and a couple months, basically from November 2020, right after the election, all the way till the market top. So we did see the Russell 2000 outperform around that period of time. And so maybe we're seeing that again. This is kind of a huge shift, but either way, the Russell 2000 is leading the way. Coffee's right behind that, up 7.5%. Orange juice right behind that, up 7.5% as well. Palladium's up 7% over the month time frame. The Nikkei, which is the Japan index, is up 7%. Soybean oil up 5%. Platinum up 5%. Crude oil up 5%. Year-to-date numbers. Cocoa obviously has led the way. There's nobody who I don't think anything's going to beat that this year, whether cocoa comes down another 100% or not. Cocoa's up 200% year to date still, even with the pullback. So that's pretty amazing to see. The orange juice right behind that up 43% year to date. Coffee right behind that up 30% year to date. Silver up 25% year to date. Japan up 25% year to date. NASDAQ up 18% year to date. Crude oil up 18% year to date. Copper up 16% year to date. So these are the leaders that we're seeing right now and kind of going through. I made some notes this morning, just kind of going through the market and seeing that we have so many things in the commodity space. It's really interesting. So we have drier patterns in the Corn Belt. A dry spell is expected this week in the core grain belt. This is the Midwest area, all the way to Missouri, lasting through early August. And so basically what we're seeing there is, this is the thing I keep talking about, is the fact that this is a seasonally bad time for any grain-based commodity. So if we're looking at corn, we're looking at wheat, we're looking at soybeans. Basically, this is a bad time. This is a bad period. This is usually when supply is getting pushed out there. Demand is dropping just a little bit here and there, and this creates gluts and so on. So this is usually a bad time for the commodity space as a whole, as long as we're looking at the agricultural space. However, what I keep saying is, once the data starts to change, and I expect it mid this month, and this is what I'm thinking, this week here is kind of my make or break week for this thesis to kind of play out. I think we should have seen the low in most of these things right now. If we see a low this week, next week, I'd go, okay, this thesis is intact. It makes sense. Let's move forward into the future. Let's see if the rally can hold. But for now, I want to, once again, we don't have any positions in any of these. And this is the thing I talk about again and again on this show, which is no positions until the price action dictates having a position as well. So even though there's a setup here, the setup could have a massive run in some of these commodities. We're also going to sit on our hands at the moment because we don't have the price action signals as well. And then we have international crop conditions, which is Russia, Ukraine. The historic drought conditions with corn production expected to drop 15 to 20%, and wheat by 10 to 15%. This significant loss will lead to export restrictions. And this is something we're seeing kind of across the board in different countries, in different commodities over the last couple of years. France, wheat production is forecasted to fall by 15%. China, the core grain belt in central and northeast central China is suffering from a prolonged hot and dry season. In India, the northwest breadbasket region is facing reduced crop conditions due to a hot and uneven monsoon season, impacting rice, cotton, and sugar crops. In West Africa, we see that the drought is worsening, raising concerns about the cocoa crop. So, once again, across the board, we're seeing all of these things kind of pick up. And in the Western Corn Belt in the United States, vegetative health is worse than last year. So this is a setup that I haven't seen before in the commodity space, especially the agricultural commodity space. That we could see a massive run in these. However, you want to sit on your hands until we see the price action. I will update everybody on our channel on Substack. So if you go into the bio, you can see our updates there. And then you can kind of ask questions, see what's going on, and see when we get these price action signals. So Kashop, so what are you thinking today? Can we have a deep dive analysis into soybean oil futures? That's the coolest thing I think I have ever seen. I actually do have something written up on that, but I'll let Kashop get to it, and then I'll bring that up in a second.
Oh, I'll absolutely defer that question over to you because you're the expert on anything related to grains and agriculture. So, first of all, guys, apologies if my audio is a little off because, as you can see in the background, I'm in a hotel room. I'm in a different emirate for a couple of days, so the audio is kind of iffy because the internet is not as good. So that out of the way, soybean oil. I have no clue what's going on. Like I looked at the chart after I saw this question, and it's like looks like it's about to rally, and then you have this big move down back to old lows again. I really don't know what's happening, so I'll just defer that to you. What's your
No, but you
take?
can go on to, we'll talk oil, we'll talk gold, whatever, and then I'll come back to that question. I'm going to put my notes together, and then I'll come back to that question that
Sure,
you.
sure. So gold is actually, I was very interested in looking at gold right after I saw. So the assassination attempt happened while I was asleep. I wake up in the morning, I turn on my phone, and that's the first notification that I see. It's everywhere. And the first thing I do, I go and look at the price of gold. Now it's weekend, market is closed. So where am I looking? I'm going to the KuCoin app. I'm looking at the Pax Gold uh, ticker symbol there. So Pax Gold, for those who don't know it, so earlier it used to be like Bitcoin used to be marketed as digital gold, right? So what happened was you had this company called Paxos Trust in New York. They created a product which was actual digital gold, meaning gold on the blockchain. So you could trade gold just the way you trade Bitcoin. Like I can send it to Jason, he can send it to anyone else. It's pretty cool. So, and because it's regulated in the United States, it's a very trusted and stable product. So I looked at that and the price badly blipped. And that was surprising because you remember this big scary news we had about Iran and the whole escalation in the Middle East. And that time there was this one candle on Pax Gold over that weekend, which went all the way to something like $3,400 or $3,200 or something like that, which is wild because the actual trading price of gold back then was 2,300. So it was like $1,000 move in the Pax Gold market. And of course that didn't last, and by the time market opened everything calmed down. But for the Trump assassination attempt, when I go look at gold and I see nothing happening, that surprised me. And then early on Sunday, that is early on Sunday US time, you could actually see gold go little over 2400. You could see Bitcoin cross 62K after being stuck in around 57, 58. You could see all the cryptos taking off, and the narrative that I saw on social media back then was this makes it obvious that Trump is going to be president. And because Trump is a Bitcoiner, he's pro crypto, we should buy crypto. And that was the reason given for the rally. And gold kind of did nothing while crypto took off. And then everyone, once again, is like, okay, we are back to a bull market and, commodities don't matter and so on. And I really think, one-off reaction to news events, which basically happens on a Sunday when everyone's asleep, I really don't look at it at all as anything significant. Most likely is just getting set up for the traders who buy the rally rate, and then they're just going to get the price driven back down. It's the same thing if, like, as someone who lives in a different time zone, I often look at the overnight markets for the stocks and, of course, for the futures, for everything. And what I often see is you have all these crazy moves in the pre market hours. By the time the market opens, it's like nothing happened. And that's nearly always the case. And this is just all the people who have access to that market. They are just enticing retail traders to get in and get in at those higher prices. And once they are in, it's just done. The selling is, they have exited their positions, they have made their profits. And whoever bought in the pre market expecting to make money when the market opens, they most likely get struck with the losses. And I think with the current, so it's too, I mean, like, I don't like to make predictions, but it kind of looks like the crypto rally that got off late on Sunday is the same way. And I really wouldn't just trust this rally. That's me. And it's very surprising that it hasn't impacted any of the other futures. Now, if everything was moving in reaction, then that would be different. That would be something major being priced in. But this just looks like someone's making money off retail again by arranging the price action in a certain way that people get lured in, and then it's going to fade. So that's what I'm looking to do. So I personally wouldn't buy this particular crypto rally, and I would be looking to fade it. In fact, I wouldn't be a buyer of any rally that has gotten off on this news, because I think end of this week, maybe next week, all of this will just reverse and go back to its earlier trend or earlier fundamentals, whatever the case.
No, I think that's a good point, and I there's two ways of looking at it. One, I think the one thing that was interesting about it is the first signal I got, and the reason why I posted about it in the group was obviously nothing to do with Donald Trump or the shooting or anything. But what I did see is that volume started to come in that day. And once again, here's the interesting thing about price action. Price action can be looked at many different ways. One way of looking at it, especially in a small market like Bitcoin, not that it's a tiny market for normal people, but in the actual world of macro, it is a very small market, and it can be manipulated in different ways. So that also says maybe somebody knew something already, and because somebody knew something already, they were looking to capture the move, sell it on this bump, and that could happen. However, I do try to look at the trade in a bunch of different ways, and one way is we've held bullish trend this whole time, which is kind of interesting. I don't know how, honestly. I would have thought at some point, not to mention it's come right to my stopping point 3 times and it hasn't hit it. I'm not sure how exactly or why I haven't got it. One, it was a stop point, and the other was a sell signal. Neither one have hit. I'm not sure exactly how that's possible, unless something's holding this rally up. And once again, it could just be buyers coming in levels, which is very normal. Or it could be it's going to go back to the top of the range, it'd be range bound. And let's be honest about Bitcoin. Either way we look at it here, the false breakdown signal can be looked at 2 different ways. You could say, okay, I'm going to buy it, I'm going to hold it, we're going to try to trade this all the way up, it's going to move higher. You could believe that. Or you could look at it another way and go, Bitcoin hasn't really gone anywhere in a long time. Now, if we really look at it and look into it, now I do have a chart that I just posted about Bitcoin on Twitter, so I can just pull that up. But if we look at it another way and go, Bitcoin hasn't really gone anywhere in a while. It's just chopped around. It's been sideways. And because it's been sideways, we really don't have any definitive, hey, it's going to move higher. Like, something that would break your thesis would be, okay, did it break out to new highs? It's not breaking out to new highs. It's still chopping around. So even though I do think there's a possibility that Bitcoin held up here, and even though, hey, I'm going to take the trade because that's what I do. It's a system. You get a signal, you take the trade, you don't really question it. Do I think it's possible it goes back down here? Sure, anything's possible. But I also think it's also possible that it bounces and hits that top of the range around 70 to 72,000 again, and then it comes back down, and just continues to chop around, creating this long-term bear flag that we're, or sorry, bull flag that we're kind of seeing here. But really, what's the date when Bitcoin really topped? So Bitcoin topped in March, and it's basically has gone sideways ever since. So crypto has a tendency of moving a little bit faster than just about everything else. So these markets, when they're consolidating or their bear markets are a little bit more short term than other, like equities. Their bear markets are going to be a little bit longer. I still think that there's value here for a lot of reasons. Do I think that we should still be looking at it and going, what's your exit strategy? Because that's the whole reason we made the first video on Bitcoin. I saw somebody made a comment on your page. You ever just going to admit you're wrong? It's like, number one, I don't know for sure right now, but I know you have Bitcoin. I know we've talked about that before. So it's not that you're hoping Bitcoin goes to zero or something. It's that we're creating an exit strategy, and creating an exit strategy and understanding that, hey, where can this thing drop? And so if I look at my trailing stop, it's still at the same level. It's still just right below the recent low. So if you put a stop right below that recent low, you have an exit at least. If you're looking for Bitcoin, you're just hoping it's going to go to 100,000, or you have these because somebody wrote on your page and they have these arbitrary numbers, and that's the thing that I hate the most about trading, is when people say things like 100,000, 500,000. Why do you think this can hit 500,000? Why do you think it can hit 100,000? What's the even number? I mean, if you trace it and you go, okay, well, I'm gonna do old school technical analysis, and let's say I'm gonna make this. It says 176%. So if it breaks out to the next move, it could go up 176%, and that's how you would get your next idea. However, that's hard to do. So I would say you can believe whatever you want. I hate price targets personally. You can believe whatever you want. I hate price targets, but I like the idea that, hey, I'm going to put a trailing stop on this. I'm going to buy the breakout. I'm going to see where it goes and just go from there.
So the crazy thing is, someone put this up on Twitter. I'm not sure if it's fake news or real news. Apparently, someone at Fidelity, someone in an investment position at Fidelity, came out and said Bitcoin is going to $1 billion a coin. No, I mean, it sounds like it has to be fake news, but I've seen it circulated quite a lot on Twitter. So obviously, I haven't gone and fact checked it or checked it with Fidelity or something. But it's just absurd to think that, first of all, even if someone says that, why would you put that up on Twitter instead of just dismissing it? And these are not people who are putting it up to make fun of Fidelity. These are people who are saying, yeah, Fidelity is on our side, go Bitcoin.
Yeah.
Like they are at some NBA game or something. And it's just absurd. And for me with Bitcoin, so I have been negative on Bitcoin sometime around since March. So I have some fundamental reasons for that. But that aside, I just want to clarify, it's not that. So it's like you go to a race, you want to bet on the fastest horse or the one that you think is going to win. And if you look at crypto today, and this is someone who's been in the space for a long time, and what I think is Bitcoin's just not it. Because everywhere I see divisiveness within the Bitcoin community. So someone in the Bitcoin community who's a respected developer, a core developer, came out and said, hey guys, starting tomorrow, I'm going to be trans. And people were so divided on that. So, on the one hand, you have this maxi community who is like, I want to eat steak, I want to, do all this manly stuff. And on the other hand, you have this peace, freedom, the other community, and you have like so many communities. And right now, none of them can see eye to eye with each other. And with crypto, see, all crypto is a cult. It's just a group of people agreeing that. So let's just take a platform. What is a platform if not a cult? You are able to attract like-minded people, and that's how the platform grows. That's how the social network grows. And that's the same with crypto. It's even more amplified with social media. And what you're seeing in the Bitcoin community is a lot of divisiveness. Now, it was this sort of divisiveness. Anyone who remembers the 2017 fork was, they remember exactly how ugly it got. Now, that was a time when money was just flooding into everything. So you made money no matter what you picked. But of course, that's not the case today because the Fed is not printing and everyone's enamored with AI. They are enamored with so many different things that Bitcoin doesn't really hold everyone's attention. So, in this environment, when you see divisiveness in a community, it is really hard for me to see Bitcoin actually growing fundamentally. So, the issue with ordinals, the issue with stacks or the BRC20 tokens, everything you look at, there are two sides in the community and they are on completely opposite camps. It's just like the US elections. Like you cannot convince a Democrat to vote Republican and vice versa. Like the battle lines are now drawn so hard, and it's the same with Bitcoin. Now, when you have this kind of divisiveness, I think there's room for the other cryptos to come in and start to thrive. And I think that's what's going to happen. So, my favorite here is Solana, which I bought last June, that is June 2023. And I've been public on that. So you can fact check me and go back to my records and check that. And what I see with Solana, so you brought up the Bitcoin chart, which is kind of just chopping around, going nowhere. And that looks fine. But if you look at Solana, it's been an absolute winner. And it's not just been an absolute winner in the past, it's also had its long consolidation phase. And I think it was just today it started to peak above the 50-day moving average. So you had exactly the way you said your stop was tested on Bitcoin but kept holding. You can see the same kind of price action on Solana, and that's held as well. Now you have Bitcoin, which is worth $1.25 trillion as we speak. You have Ethereum, which is worth 400 billion, and then you have Solana in fifth place worth 71 billion. Now, what has the more upside just in terms of market cap growth? There's a finite limit to which Bitcoin can grow. It's already $1 trillion asset. How much bigger can you get? 2 trillion, 3 trillion? And then the question is, can you sustain at those levels? Now, because US has had this big mega cap rally where Nvidia has been worth 400 billion to 3.5 trillion, people think it's so easy to just add hundreds of billions of dollars in market cap, which is not true. So I think the number of companies, even in the US, which are worth more than $200 billion, just try to take a guess at that number. It's not a very high number.
No, and I agree with it's so one, I'm always going to be trading the what's in the future space because it's Ethereum and granted, yes, there's other places where you can find Solana futures and so on. But I trade on the CME. And you're going to basically find Ethereum and Bitcoin. And that's the only two things that I'm really usually trading. So when I'm talking about those things, just understand that's the reason. So if we're talking about upside, though, in relative strength, Solana has proved that kind of time and time again. It has shown upside, relative strength. It's continued to be strong. So there is more upside in something like Solana. However, the thing that I always have found about the crypto space, which is hard to do, which is to over time steadily outperform Bitcoin. That doesn't mean that there's not other things that can do it in the short term. That does not mean there's other things that you cannot trade. I'm saying that over time, the amount of time that you and I have been in those markets, it's hard to be long things for me personally than just kind of holding, hey, I'm going to hold the major, maybe two majors, maybe a couple of things that are speculative, like a Solana and so on. And then you can kind of generate some alpha from it, because in general, it's very hard to beat Bitcoin, and it's not because it's the thing that's going to give you the most tradable bang for your buck, so to say. It's more because you can't. The pullbacks aren't going to be as heavy. You're not going to be in something that's going to drive down, 90%, which can happen on the smaller coins because the market cap's small. However, you're not going to have the same upside. Solana is going to have more upside in that short-term run. So for a trade, I think it's a great idea. And it's just like you said earlier, I like the way you brought up the communities just kind of divided, and it's kind of funny. And like looking at this, I dug this up when you were talking. Yeah, so it was a Fidelity director said it, which, like you said, they go, okay, well, that's really cool. They're on our side, and my only addition to that is none of these people are on your side. They have reasons for doing these things. They might own it. You never know exactly what their reason is for saying something like this, because either way, it'll get more people into it. Now, I'm not saying that that's, if you're a Bitcoin bull, is that a bad thing? Yes and no. If everybody's in the trade, let's say today, every single person is like, I'm going to be a billionaire. Every person I'm going to be a billionaire. I'm going to own Bitcoin. So every single person becomes a Bitcoin maxi, and they all buy Bitcoin here. They put their life savings into it. They take out debt. They go full in. Bitcoin will drive up. The whole market will drive up. Solana, Ethereum, whatever. It'll all drive up for a little bit. But let's say they're all just, hey, this is going to be great. This is the way it's going to be. Who's left to buy? There's nobody left to buy. So you also want to see things hated a little bit before you get too interested in it. And when things are a little bit hated, that's the rallies that I really like. I don't like how I loved when the FTX thing was happening. My favorite thing of Bitcoin was that everybody hated it. They hated it. Like nobody, it's a scam now, like that was never, the normal community never went to that level before that. They never went to the scam, but finally FTX happened. It was a scam. Everybody hated it. That was the bottom. And I love when things rally at that same point, but we're just not seeing any of that. We're not seeing that rally. So we're not seeing it hated enough for me to say, hey, this for sure could break out. But the price action's dictating what I do, which is always the kind of the normal. And so I'm going to continue to stay long it until it gives me a reason to get out. However, I see that there's fundamental reasons to be a little bit more nervous about it than people are being at the moment. Oh, and before I forget, let me get to the soybean oil, because man, that's cool. So I do have some notes on soybeans and soybean oil, obviously. I put out a commodity report every Wednesday, so if you guys ever want to check that out, please check it out. But soybeans, there's lack of bullish fundamentals seen in Russia, Ukraine, and Brazil due to their droughts. So I'm not seeing the same thing in soybeans themselves. Historic U.S. flooding issues have reduced crop acres, impacting overall production. So we are seeing that. There is potential for that dry pattern I keep talking about to also affect soybeans, but I'm a little bit more bullish on corn. I'm a little bit more bullish on wheat. I'm mostly bullish on wheat here, not really anything else. But once again, when you're seeing those strong fundamentals in those other areas, most of the time that will drive up soybeans, but I want to be in the winter. And being in the winter is probably going to be wheat or corn. However, when I get price action signals, I will buy all three. I will buy wheat, corn, and soybeans and not even think twice about it. And so on bean oil itself, I have no strong bullish fundamentals for bean oil currently. Bean oil is priced at a discount compared to other vegetable oils for human consumption. Technical indicators and capital flows are suggesting a tradable rally. But really, the recent spike in bean oil prices is the Indonesia, China palm oil trade, and that's most likely temporary. So I think the rally fundamentally is temporary. However, we're long soybean oil. So once again, I always go two different ways on things. It's kind of the same thing with Bitcoin today, which is you have this rally. It could be completely news driven. Most of the time it is, but the only difference with soybean oil and Bitcoin is that soybean oil is priced kind of to perfection right now. Like you have it at a low spot where it's perfect to break out and make a nice rally. Bitcoin, I wouldn't exactly say the same thing. Being at 60,000, is that an area where everybody's like, hey, I love Bitcoin at 60,000. It's a really great deal. I don't think so, but soybean oil where it's at is kind of a great deal. So great question. Thanks for asking a commodity-based question on soybean oil. I don't know if anybody's ever asked me about soybean. So
So I
let's hop
think,
into the market, unless you have something to add. Go ahead.
yeah, so I was reminded of 2022, around June to August 2022, when I couldn't scroll past 5 tweets on Twitter without someone talking about a gas shortage. And that was when natural gas stopped at $12, and that's it. Then it's gone down 90%. Like, I think the bottom was 1.6, and now it's back in an uptrend. And it's kind of like that. Like, when you see, I mean, no one really cares about natural gas. During Enron times, sure. During Amaranth or these option sellers, these brief periods when gas is in the news, most of the time no one cares about gas, and then all of a sudden there's this hysteria around natural gas, and that's the top. And I think it's with soybean oil, it's the opposite. So you have seen the price getting beat down and beat down and beat down, and then you had this rally, and then it's again beaten down. And again, no one cares except for the first person who is watching our show, which is actually pretty interesting because I mean, like, that's the kind of audience we're attracting, right? So someone who is staying, getting into the trend right at the beginning. And I remember, in fact, when we were talking about Bitcoin, so that first rally past, I think it was 28K when it broke out of its range sometime in September or October. That's when you and I started talking about it. And we had this back and forth where I said, this is news driven. Maybe it doesn't last. And you're like, it's gone through this big consolidation. It's broken out. Even if it's news driven, it just goes back down and hits my stop, and so be it. And you bought that, and I bought the other coins instead. It's been a good trade, and it's kind of like we come back full circle because here we are once again, Bitcoin's in that sideways pattern, and we are having the same conversation, and we just don't know how it will go. But it's very interesting that it's like a conversation is repeating about 8, 9 months later.
No, and I like that because it's we consistently see that type of a move for me. So this is the thing that I've always learned, and it's the reason why I just like I fade my own fundamental models all the time, and the reason is because I have found over time, and this is not to say this trade works. It's to say that this trade could not work just like any other trade. But I've found over time, most of the time when the fundamentals don't match up, right? And I'm sitting there and going, I don't want to take this trade because it doesn't make any sense to me, my fundamental models, anything. Most of the time, those are the trades that work. I always go back to like 2023 in the NASDAQ. I hated that trade. I did not want to take that trade. That was the first time my system ever gave a signal and I had buy stop got hit and I was almost like I want to pull this thing out of my portfolio. I don't even want to touch it because it was just that at that point the Nasdaq was a absolute disaster. The market was an absolute disaster. Everything was an absolute disaster. Everybody had gotten their ass kicked again and again and again trying to buy anything. So then you have the Nasdaq come through and it gives its first buy signal. And then it gives another buy signal, and it's right after the banking crisis that happens. In 2023 in February, I think it was, you had the banking crisis happen, a regional bank blew up, and so on. Why in the world am I going to buy the Nasdaq at that point? And so we went to full position. Obviously, the trade still held up even to this day. However, so mainly what I'm getting at is sometimes I have to fade my own fundamental models because the fundamentals sometimes are unknown until later. That doesn't mean that it always works. It doesn't mean that it always works. So obviously, when I have something that's a very tight stop, like if you look at Bitcoin, I'll pull up that chart again. I still have it. Do I still have it? Of course, I deleted it. But if you look at the chart of Bitcoin, you see that you have a very close stop loss on here. So you can kind of put on the trade in a very simple way where you're not going to get killed. And so the risk to reward there is very low. So you'd go, okay, the risk to reward is very low here. I'd have a stop right under that recent low. Use closing levels. That's why I have line charts. So I use closing levels on everything. Weekly closes for my stop losses, as well as weekly closes for my entries and everything else. So I like weekly closes. You see a weekly close here, you go, okay, well, I'm going to put my stop loss right under that major level. I'm going to buy this false breakdown signal. False breakdown is basically when it takes a level that it broke down from. On Bitcoin, that was the recent one was, let's see, of course, it was 58,303. So it retakes 58,303 on a daily closing basis. And so basically you want to make sure this level isn't too short term. So make sure it's at least over 30 days. We break back up and over that level, and then it takes off. So we cleared the major resistance zones where the high volume bars were, which is basically between 58,000 and 62,000. I don't see why the trade couldn't go back up to 70. However, once again, that's a swing trade. So we're not saying like here, I'm not going, hey, I'm fundamentally very bullish. I think this is a new trend starting. That would happen if it breaks over 72. However, we're still long Bitcoin in our long-term portfolio and our swing portfolio, so I'm not worried about it in some other sense. I'm just saying if I was a trader, short-term trader, I would trade it here and go, okay, well, I bought it after it broke 58,303. Now I'm going to try to trade it to 70. If I'm a trend trader, I'd wait for the breakout. If I am a long-term trader and I've had a position like I do, I would just sit on your hands. So that's kind of the three different ways of looking at it. And if I'm a fundamental guy, I would go Bitcoin's consolidating. This might make a lower high here. So I mean, you could figure out a bunch of different ways to kind of trade it, and that's important. But I'd always say I love the trades. I've learned. Sorry, a better way of answering this. I've learned to love the trades that don't make sense to me. That's something that I struggled with when I first started to trade, but I think I've learned over time. I've had people say I'm very unsophisticated or that I'm a caveman investor. I've had people say all of these terms to me over the years, and they're partially true, but it's taught. I've learned that the more I feel strongly about something and the price action starts fading my strong feelings, the more I should probably just put on the trade. So there's a bunch of different ways to look at it, but I like that you brought up the conversation that we had because it's how most good trades happen, even though it doesn't make sense. I don't think most people would say that's how my best trades happen, because in your brain you'd want to think about it a certain way and go, I knew this is going to happen because of this, that, and the other thing. And then people in hindsight will say, yes, FTX, I knew that would happen. And really, you got to go back to exactly what you said on that day at that time. What did you feel on that day at that time? Did your systems tell you to buy? Mine sure as hell didn't. Did it say to buy later? Mine sure as hell did. So there's two different ways of looking at it. So simplicity is the ultimate form of sophistication. Yes, absolutely. I completely believe that, because the more simple your strategy is, the easier it is to follow. If it's complex, if it's hard to understand, if you don't understand it some days, and I think that's how we all start with trading. And I think that the thing that you and I have learned over the time is that sometimes the price action doesn't match anything, and you won't know until years later. We've seen this rally for 2 years. The Fed was still raising rates, monetary policy was tight. All these things weren't making much sense. However, the rally existed. And so you kind of have to turn off your brain sometimes. At least I have to, as this is what I do full time. This is my I have fun. I have the job doing it. I try to turn off my brain sometimes and just go, what's the price saying? Is it just telling me to shut up and you're being an idiot? And most of the time, it just tells me to shut up and I'm being an idiot.
It's uh, it's absolutely funny that you say that because like right when you were talking, so I know the way you trade, you set up buy stops. So when something gets out of a downtrend and it hits your buy stop, you are in the trade and without manual intervention. And the way I do it is I set alerts, and when something crosses that, I manually go and pull the trigger. And right when you were talking, I had three of my alerts go off, and all of that in completely different industries. Now, on a normal occasion, that would never happen. But given what we saw last week, the reaction to the CPI, what everyone's expecting, and everyone's talking about breadth, everyone's been kind of miserable about how breadth has been for so long. And now, just as we were talking, it's a Monday, and I'm seeing three of my alerts go off in completely different sectors. One is casino and gaming, one is oil and gas, one is shipping, completely unrelated. And it just tells me maybe breath is coming back because I never had this situation happen before. And if breath is coming back, there is absolutely no reason to be bearish. Even if the indices go down, doesn't really matter. And to me, that's also the other part of it. Like, if I did not, let's say I've been on vacation for the last week, I'm in the mountain somewhere, I don't have signal, and I haven't seen the CPI, I haven't seen the price action. When I see three buy alerts go off like this in different sectors, I wouldn't be able to put that in context. But I would still take the trade because once I kind of figure it out, then I would have the context, which is basically breath is coming back. And if we look at the NASDAQ rally last year, at that point, it made zero sense because the news was scary. You were supposed to have deflation. And how could that be possible? But if you just look at it now with the benefit of hindsight, it is super obvious. So the Fed, the Treasury, and the FDIC, they got together to bail out Silicon Valley Bank, which banked pretty much all the startups in Silicon Valley. And once you have this big mass of firepower, which is uh, pretty much the entire US deep state or the US government just going and plowing money into a bank which is controlled by rich people, which, the entire thing was orchestrated by Bill Ackman, who is a hedge fund manager. He was very public about it on Twitter. So when you have this kind of event happening, of course, all that bailout money is going to go into AI. Of course, it's going to go into all those startups. Of course, it's going to go into the tech sector. And if you look at it in hindsight, it is blindingly obvious. But at that time, the narrative was we are going to get deflation, banks are crumbling, real estate is crumbling, and so on and on. But this mass of firepower just going to this one particular area of the economy kind of jump started everything. And if you kind of pull back and look at the breakouts in the Nasdaq, the AI bubble, the movement higher in crypto. So Bitcoin bottomed at 19,500 right as the SVB news was getting printed. Like I think it was the Friday afternoon, the bank failed, and Sunday Bitcoin bottomed, and then it never looked back. So if you can put this in context, but the problem is that this is only knowable with hindsight. What is knowable at that exact moment is the price action. And of course, at that moment, that price action makes no sense. But give it a few months, and then when you kind of piece the news together, you realize, yes, of course, it makes sense. You bail out a bank in Silicon Valley gets government money, everything in Silicon Valley goes up. Yeah, it's that obvious. And it's the same like every 1 or 2 years we have these I come from India, so we have these big emerging market fund managers. They come and talk up India. And why do they do that? Because they see liquidity flowing in, and so they talk up India. More liquidity comes in, and it's the market is actually Indian market is actually as crazy as the US market in terms of valuation and how long the bull cycle has been going on. So you have this liquidity come in, everything goes up, everyone's happy, the narrative changes. And if you're a fundamental guy and you're looking at saying, why does Nestle India trade at a PE of 75 and Nestle Global trades at a PE of 30? Is India really growing that fast? It's actually not. But what's happening is the other reasons, the liquidity, the flows, and all these things, which you can only understand if you're looking at the price action, the raw price action without a bias. And I think so. As a fundamentalist, I used to have a hard time doing that. I think one of the things that our interactions has done is let me look at the price action without putting a bias on the price action, and at the same time trying really hard to figure out so that I can understand why I'm doing something. Because if I'm just buying a breakout on a ticker symbol that I know nothing about, I mean, there's this market wizards quote about some guy who didn't know what lumber was and made money on lumber futures. So I know personally I can never be that person. But I also know that something like that makes money. And as a trader, you need to make money. As an analyst, as someone who looks at fundamentals, I really need to know the why, because otherwise I would drive myself crazy. But end of the day, I get paid to make money. So I do that. And I think the way we put these talks together, that really helps with that, because you look at the price action and you go, this is a buy stop, this is a level, and I don't care what the reason is. And I look at the reasons and I say, maybe it makes sense, maybe it doesn't, but if this makes money, then I cannot just dismiss it. And I kind of think both perspectives reinforce each other.
No, I agree, and it's important to have both angles, and I think this is one I'm very good at just tuning it off and just jumping in, but I also enjoy the hey, if let's say Bitcoin here, it breaks out, it somehow rallies from right here, goes right through 72. Then I would say, okay, well, there's a different story building here. It's the same thing when 2020 happens. Obviously, anybody with two brain cells could have said commodities will go up, but for most people, if you go back and look at the charts during that time, because everybody was like commodities will go up, but it didn't just happen on day one. It wasn't like the rally changed to commodities only, and then we're here today in inflation. Like that's not how it happened. It went Oil went down right in April. Oil went down. That was when it did and went negative. People always think that happened in March. No, it was April. So it was after the market bottomed. Oil then went negative. Yes, oil rebounded out of that because, of course, oil rebounded out of that. That only makes sense. Not to mention, as long as they rolled into the next contract, every single thing in oil was going to go up. Of course, we all know that. But then it got to 40 and it just chopped sideways for a long time. And then most of the other commodities, they didn't go anywhere until September, October. Then you start to see bottoms, you start to see relative strength, you start to get buy signals. So it's a coming up with the story, the idea. What's the big idea? So if I go, the big idea is the Fed. Let's say I'm thinking this through and going, and I'm just kind of spitballing here. But if I'm thinking it through and I go, the Fed is going to start to cut, liquidity and globally people are cutting already, and globally they're going to cut more when the Fed starts to cut. So let's say we're going to see rate cuts, we're going to see more liquidity flowing into the markets. The Fed's going to get a little bit behind the curve like they always do, which then they go, okay, well, inflation's dead, so therefore we're going to keep cutting, and then inflation's going to get back out of control again, which is the very normal way things work for the Fed all these years. They always get behind the curve. It's the same reason they were going, inflation is transitory when oil then hit $130 a barrel. It was a ridiculous thing to say, so here we are today and going like that. That was ridiculous then. And then, basically they kept raising rates as oil, started to come down. It's just how they always operate. That's just going to be the Fed till the end of time, probably. So let's think about it that way and go, okay, well, what is the thesis for commodities to go up? So I'll create that thesis. You can find the fundamentals behind that, figure that out. But then also, I always have another thesis, which is what's the thesis that's the opposite of everything I'm thinking? And both of these help me to just kind of be more price action based. So I still have my view. I think it's important to have a view so you can really like the one thing I'm good at is really stepping on the gas when things are going really well in my direction. And I don't think I can do that without a view. So if I have a view like 2021, I'm going commodities are going crazy. I'm basically stepping on the gas as much as I possibly can. And you can only do that by really having a view in it because you have to have conviction. And that can be conviction based on you could be the lumber guy and not even know a contract you're trading, but your conviction can be based on, hey, I really like breakouts. I really like this technical breakout system or whatever I'm running. Maybe your conviction is built on you built your system, you back test, you've worked on it. Maybe your conviction is built on fundamentals. Whatever it is, I think it's important to have that conviction. So I think that makes a lot of sense on both ways. And I think most traders need to build some sort of conviction strategy, something to become really good traders.
So you were talking about lumber earlier, and I know you had a trade on, you had that band squeeze breakout, and then it's gone right back down. And now you have, I mean, I saw the news recently where someone was talking about housing starts are going down, homes are becoming unaffordable, but home builder stocks are catching fire, lumber's kind of picking up again. And it's kind of like you have two contrasting stories. So where do you stand on that?
Ooh, so lumber has been a uh, without swearing a tough one. So lumber has just so when for me as a trader, the things that are the hardest things to trade are just chop because my systems are very long term. Lumber is just chopped. You know, we've had really great trades in lumber over the years. However, when it's just choppy like this, there's nothing really to do. But if we look at home builders, which I've been long all year long, let's look at a chart of that. So ITB or XHB, which one do you think?
XHB? I think
XHB.
that's a more popular one. Yeah.
Okay. I trade the ITB, so
Okay.
XHB looks pretty wild. So it has a huge move here. So the home builders look pretty interesting. So seeing a huge move out of those lows, and it's already been a huge move. So basically, if we go back to 2022 and where it bottomed, and just draw a line to where it's at today, up 111% in the sector. Um, so once again, this is the hard one of the hardest things I have to do is kind of understanding that sometimes things aren't going to make the same amount of sense that I want it to. That's the hardest thing for me to do because we're long the home builders. I see the housing data. My models talk about housing being a dead market continuing to die and so on, where the home builders are continuing to just rally. Lumber's just chopped around, gone lower, chopped around over and over again, but home builders continue to rally. Will I ever sell something that's continued to rally? No, I used to. So it's hard because there's a couple things. When you have more capital, so when you're first trading, you don't have enough capital to really have that staying power, to just sit in something for while it chops around or does whatever while you have a wide stop on. So you need staying power first off. So I had the staying power, and I still think even if you only had a couple bucks, I think the way to trade it is this way. It'll help you to really hang on to your winners. That doesn't mean it has to be as long term as my system. It could be much more short term, but just thinking about it this way might help. So if you're able to just kind of have a really wide stop, understand that bull markets rotate, but you're in the winners still, right? If you're looking at it from the beginning and going, hey, I'm still in the winners, these are still like year over year, the winners that have been continuing to win again and again and again, and I'm going to continue to just sit in this trade. You will make more money doing that than any other form of trading because so many people, I think the hardest thing to do is to do that because you're always going to see the next shiny object. And that was my hardest thing to break as a new trader, which was, hey, this looks great over here. You know, like I've made money over here, but this can't go up much more. It's kind of like somebody wrote me about the KRE the other day, and if you look at the KRE, what's it up today? It's up another 4% today. Um, Basically, I said, hey, we got a breakout signal. I'm going to follow it. Something about rate cuts or some stuff you and I talked about last week. And so the guy writes, retweets me and writes, did I miss something? Did we get those rate cuts this year or something? And I'm just like, well, yeah, no, and I was also one who said we weren't going to see 6 rate cuts at the beginning of this year, or maybe any, and you were one who helped me to kind of see that there's a possibility of at least one. So kind of looking at it and going, okay, well, they're going to bring down the curve here. There's a possibility of all these things. My macro models are all pointing that direction. And then also saying, I'm just going to take the signal. That's as simple as it gets. So to me, regional banks could be the start of another mega trend. So I'm going to take my extra capital. I'm going to buy into that. But am I going to get rid of the home builders, which have already gone up a lot? No, because nobody knows how far something can go up. That's the hardest thing that I had to learn to understand is like, I had a feeling, if I made 10% on a trade, that was it. There was no possibility that thing could go anymore, which is like, it's funny to think about today because it's like, we've been in so many trades that have been like insane, Coco being a 200 and something percent winner. These things happen all the time, of course. It's the same as you. So mainly you want to figure out those mega trends each year. What are the mega trends going to be in, and how do you recognize that? And I wrote a little piece the other day talking about like what are the ingredients to finding mega trends. What are the ingredients? Like how do you find mega trends? How do you find things that can keep moving? And what starts it off? And the couple things I wrote down were sentiment. You want to see very bearish sentiment. So basically a bunch of bears, everybody hates it. Will small caps, small caps, will they ever catch up again? Probably not. Small caps are never going to catch up. So therefore, why buy small caps? And then we go down a little bit more, we go, okay, well, small caps can never catch up. And then we go to positioning. You want to see positioning to a point where everybody's on the bearish side, going, this thing can't continue, and you're seeing it in the numbers. So seeing the sentiment's one thing, but you also want to see it in the numbers. COT reports, sentiment indicator, there's breadth, there's a million ways of measuring it. Volatility. You want to see volatility die out because that tells you that nobody really cares about it anymore. Finally, people have taken that last trade. You see that in the Russell 2000. You see that breakout. We got our signal on that breakout, which did not work. And then it went down from there. So, and then you want to also finally see a breakout to make that trade and make that move. So once you see all those things together, you can kind of go, okay, this trade could work. So the regional banks, small caps, they have the ingredients. Will it work out? I'm not sure, but there's a stop loss that's not too far away. Breaking a major level would also tell me that that's the end of that. So I'm enjoying that the breakout can happen. And I'm always looking at my risk. So the risk to reward makes sense. There's not a very far away stop on any of these because the volatility is so low. So the risk to reward makes sense. The trade makes sense. It seems like an easy move, but I don't think a lot of people are going to see that until 2 years down the road and then go, well, this is the greatest trade ever. And then when everybody's doing that, that's when you want to probably get out.
Yeah. And I like the fact that you used KRE and megatrend in the same sentence. It just reminded me of last year around Q1, Q2, when the consensus on Twitter was US has too many regional banks. We have to cull it down. There is no other nation on earth which has as many banks. So it's good that they all go bankrupt. Let the Fed just let them go bankrupt. And basically, the argument was if they have CRE loans, if they have real estate loans, it's not a problem for the Fed. We should just let them go broke. And so that, everything can get consolidated into the money center banks. And here we are. XLF has done pretty well, but I like the fact that you point out how the regional banks could be starting a mega trend. And wouldn't that be awesome if you see KRE outperform the XLF over the next 2, 3 years? And it's something that could happen mainly because no one's expecting it. And that's really the recipe for getting a mega trend. So going back to 2022, I remember looking at, I follow the FINRA short interest, it's public data. And it was around December 2022, right after FTX, when everyone was saying, oh, Bitcoin is done. And I went and looked at the short interest on Marathon Digital. Short interest was over 70% of market cap. You looked at any Bitcoin or crypto miner at that time, it was something similar. The short interest on these stocks was insane. And the same with all these electric vehicle stocks, Blink Charging, EV Go, Plug Power, QuantumScape, all these green stocks. The short interest was just insane. And that just told you that at some point it's going to reverse. And I think the best performing stock last year has been Carvana. And the reason for that is the short interest was again insane, even though the stock dropped 99%. The stock dropped 99% and the shorts didn't cover. Now that's some serious hubris. And when you get to those extremes, you're 99% likelihood of getting a reversal because how much lower can it go? Yeah, the stock can go bust, but if you remember, so one of the crazy things that happened during COVID was Hertz went bankrupt and the stock kept going up even though it was worth absolutely zero. And it's just something that happens when money is ultra loose, like we are seeing today. And I think that's also probably a reason that Jim Chino shut down his fund. Most short sellers are out of the business. And I know we are getting off on a tangent here, but I was just reading about Hindenburg Research. They put out this short report on Adani Enterprises, which is one of the big oligarchs of India. And I think Adani lost close to $150 billion worth of market cap on that news, and Hindenburg made $4 million off that, which is really, really sad because you did all that work, you took all that risk, and there are guys who have traded Solana meme coins or launched Solana meme coins who have made multi-million dollars in this cycle. And here you have the people who are doing the best research and they're just not getting compensated. But again, that's the market for you. And that's as traders, that's the hand we are dealt. And you just have to find something that works for you and power through these times. And as fundamentalist, when I look at these things happening, it kind of does make me feel a little sad. But at the end of the day, I just have to be a Seneca or a Marcus Aurelius or a Jason and just sit calmly and just take the next trade because that's the only way you make money.
No, I agree, man. It's funny. It's like you do sometimes just have to continue to just take the next trade, and it's hard because it's a situation of constant growth as a person, and I think that's what trading is more than anything else. It's like, how do I consistently continue to do the right thing over and over again? And it's hard. Like that's like the human experience, really. Like, that's the human experience is trying to do the right thing no matter what the costs are. And that's really like trading is like continue to take the right trade no matter what the costs are. Sometimes the costs are actual money, sometimes the cost is mental health, sometimes the cost is, it can be high. But it's the reason why, that I know a lot of people will put out letters and they'll put out signal services and so on. And those are the people that are going to make the most money in our industry. They're going to put out signals every single day. They're going to say, we're buying this, we're buying that. This is going to go up to $1 million, and it doesn't, and make $1 billion proclamations about Bitcoin. These things are what we're going to see again and again and again in the industry, and what people really like, they enjoy as new traders. Because I really do believe that trading is and this is going to sound bad, and this probably cost me some subscribers, but I think most people, when they think of trading, they're thinking of gambling. So when they're thinking of gambling, they're going, okay, if I put money on X, I'm going to make X. This is going to bring me to here. You know, and really trading is I got to try to do the right thing every single day. I have to take the right trade every single day. I'm not going to have trades sometimes for weeks, maybe even months. So you're going to have to learn to sit on your hands and not do anything. And then real good trading is really boring. It's incredibly boring, incredibly mundane at times. So you're going to have to learn how to be okay with all of those things. And if you're okay with it, you can become a good trader. But if you're just here for action, it's not going to work. And people don't like to have that conversation ever, which is are you here for action or are you here to trade well? Because real trading can be really boring. It can just be, hey, for me, hey, I got one signal this last week. Hey, you know, I mean, there was a time that everything was chopping around from, I can't even remember. It was recent. It was just a few months, and you know, somebody was writing me and going, "Why don't we have any new signals? Why don't we?" I'm like, "Because I don't. I didn't. There was nothing new trading wise." Well, other positions were continuing to make money because breadth was so thin. There was only those positions. That was it. So I think it's a learning how to just do the right thing, be okay with trading being boring, not looking at your account 50 billion times a day and so on. Like this stuff will make you a much better trader, but it's much more boring than looking at the account, stressing about it one way or the other, being excited when it's up, crying when it's down. Like, you know, I have clients who are like that, you know, that I have to talk to and be like, we can't have conversations like that anymore because they'll be, you know, stressing when it's up and sad when it's down. And it's like your goal is to make money year over year. Your goal is it can't be to make money every day because it'll never happen. It can't be to make money every week because it'll never happen. Every month will never happen. Every quarter will never happen. But you can figure out how to make money most years. And so if you can do that, you're doing better than most of the traders out there. Yep. It seems like we lost you, Kachop. But okay, guys. Well, we're gonna end on that note, and we'll see you guys next week, Monday at 11 a.m. We'll also have our show with Jason Shapiro on Friday at 11 a.m. So you guys can tune in, see Kashop and I talking with Jason, talking through the commodities and so on. Sorry, the future space covers the future space. So covering the future space, COT reports, mean reversion, reversals, just what he's thinking in the market. The guy has all types of great stuff to say. So I'm excited to talk to him, and I'll see you all on Friday.
Bye, everyone.